and welcome back to the CFO Summit right now by the Kamikaze B2B Media. And right now, we are on our next panel discussion on next revolution in finance, the rise of intelligent automation. Well, I'd request if you have any audience questions, if the audience has, all you got to do is type in the Q&A tab and we will address it to our moderator and our panelists at the end of the session or during the session if time allows. So thank you for your participation in our previous panel. We had some incredible response from the audience. So thank you so much for all your questions. Well, ladies and gentlemen, now for this incredible panel discussion, first up, we've got Mr. Vijay Vaishnav, Chief Financial Officer, Eros, now joining us. Well, Vijay, a chartered accountant by professional, Vijay has more than 14 years of experience in core finance functions specializing in media and entertainment sector. His experience includes head finance at Z Entertainment Z5, which Viacom 18, Mozabear, Balaji, EY, and KPMG. We also are joined by Mr. Omar Rizvi, Chief Financial Officer and Company Secretary, Sindh Microfinance Bank Limited. Omar has over 12 years of experience as CFO, Chief Risk Officer, and the Chief Operating Officer in microfinance banks in Pakistan and Nigeria. Omar has hands-on experience in implementing core banking applications, machine learning for nano loans, implementation of BI system and customer risk profiling and scoring models in banks. We're also joined by Mr. Hitesh Uppal, the Chief Financial Officer, Magicbricks Realty Services Limited. Well, Hitesh is heading the finance vertical of Magicbricks. He's done some incredible turnaround work at Magicbricks and has close to 17 years of experience, which includes working with brands like the SRF Limited, NIIT Limited, and the Citigroup. We're also joined by Mr. Gaurav Jain, Chief Financial Officer, AXA France VIE India Reinsurance Branch. Gaurav is a seasoned professional of the finance industry. He has more than 16 years of rich and qualitative experience. Currently, he's working as the CFO and a member of the branch executive committee at AXA France VIE India Reinsurance Bank for developing strategies, policies, and operating plans to deliver the brand's growth and profitability objective. He's playing a pivotal role in the management of regulatory relationships and group reporting requirements. We're also joined by Mr. Deepal Shah, Chief Financial Officer, Allcargo Logistics Limited. Well, Deepal has more than 2 decades of corporate experience, and his areas of specialization extend to key practice areas like freight forwarding, customs brokerage, finance, legal, and taxation. While he's held a leadership role with some of the biggest entities in global logistics and specialized in M&A, international alliance, and partnership. In his current role, his key responsibility areas include finance, accounting, treasury, fundraising, processes, investor relationship, central procurement. And ladies and gentlemen, this entire panel discussion is going to be moderated by Mr. Sumeet Pathak, Digital Workforce Evangelist, IMEA, Automation Anywhere. Well, Sumeet has over 20 years of experience with top global banks. An evangelist of software automation, Sumeet has implemented automation strategy and execution across BFSI industry. Sumeet has built Automation Center of Excellence in multiple banks and led their digital transformation agenda. Well, with this now on time, I'm leading it to our incredible panel. Thank you so much for joining us. Over to our moderator, Mr. Pathak, for taking it forward with his panel. Thank you once again.
Thank you, Bhavna. Thank you. I'm really excited about this discussion. See, amazing lineup here. We've got CFOs, full house, right? And from 5 different industries. So I think for whoever is like the people who are tuning in, it's a really good opportunity to ask you as many questions as you can, right? Because we always good to figure out, okay, what's going through CFO's mind, which you always wanted to know, right? So this is a really right forum to ask. And as I said, the exciting part for me is that we get to cover entertainment industry, the bank, we got realty sector, insurance, and also logistics. So quite a spread. And to keep the session interesting, it is more of a conversational dialogue. I have prepared a few questions. Certainly, I will give it a start. But then after that, just let's jump into it and make it as if we are having a digital boardroom, not digital, actual boardroom across the table having a conversation. So let's go with that. So see, we know that, and pardon me, I may be a bit audacious when I talk a bit about CFOs in front of CFOs. So if I go a bit off the track, please pardon me here. But from what I have seen, like the CFO role is fundamentally changing, right? From being a controller, they will become business partner, and now they're advisor. And I was in one of the session, and someone said they're also become now digital architect, right? Since March, when the pandemic was brought upon us, two major roles came out. So while they were always important, they became critically important was CIO and CFOs. The organization started to look internally to say, okay, help us out in this situation, right? And the combination of CFOs adopting the technology was it was an actual winner. And let's cover that point in this conversation. And how about like how you have seen that within your area of work, and how you have taken some risk, some popular, some unpopular decisions, and how it has come about. So let's open up on that. So in no particular order, let me just start with a question, and then let me go from there. So Vijay, let me come to you, right? Eros, now we know that. Indian film industry, I did some research, it's a 183 billion rupee industry, I didn't know that by the way. But has gone through the toughest phase, as we know. 6 months, we have not gone through the theaters anymore, right? It's been a zero quarter for them, right? So they have really struggled. But on the other hand, there has been OTT streaming platforms have been the actual beneficiary of this, right? Now, as per some of the reports which I have seen in 2019, the industry had a $173 billion revenue, right? Now, Eros now falls into that category, right? How this has led, so let me put it this way, how it has impacted your transformation goal. Up until March, you had a plan that, okay, we'll go with certain growth, certain penetration. OTT was coming up anyways, but sudden this lockdown and pandemic has catapulted this big time, right? So the question I have is that how does impacted the transformation goal, and how you're using the technology to basically come up that particular curve, hoping that will remain there. So it would be good to get some thoughts on that.
Sure, Sumeet, yeah. So, as you know, I mean, media and entertainment can be broken into the traditional media and the, upcoming digital media, right? Digital media was, to be honest, holding its, impact pre-COVID, not to that level at which, they were expecting, but they knew somewhere around, that digital will take over a good pie of media and entertainment, maybe 2 years, 3 years down the line. But I believe, some changes has to be forced, right? So this particular COVID changes was a forcible change for the users and for the audience to not go to the traditional media for content consumption, but look at the new age media like digital OTTs and all, and try and consume content over there, right? At your time, at your leisure, and the kind of content that you want to consume. So that was the USP for OTT business all this while. What I believe is that, and that can be seen, in the top line, in the share price. You look at, Netflix, you look at Amazon, they all are trading at, 3 years in lifetime high, so it's not 52-week high, but lifetime high. That is the kind of impact, what has happened to the transformation earlier when I go right back to 2014, when, digital was just putting its first step, right? So I was part of, the Woot launch for Viacom, then Ditto, OZ for Z. So that time I used to wonder how digital would take its time and be a good contributor to the M&E sector. That time the digital contributed almost 1% or 0.5%. When we used to syndicate rights of movies, digital was like, okay, I'll take digital rights also. It was like that, take the main rights for your satellite. Yellow saath mein free mein types, Now people have, the contribution has gone up massively from 1% to 30% now. And in some cases, like movies which has directly gone on OTTs, there, there's no theatrical rights. So the entire pie of the syndication is bifurcated between your digital rights and the satellite rights. And mostly, the other OTTs have taken those kind of, a major chunk in their PNL, to ensure that there is some freshness to the content and some life, change that the mindset that needs to get changed from the user perspective. So there is no multiplex concept as such, but trust me, I could sense it, that theaters are not going anywhere. It is there to live. People will go to the theater because that kind of experience. It's not only about the sound that you get over there, but it's about the vibe. You go with your partner, you go with your family, you have that dig in the tub of popcorn, have good time. So it's more of an outing than what do you call a content consumption. So I feel that it's there round the corner, and definitely by next year we would see all the theaters opening and people going there to watch the content. But as I said, this pie will now become a big pie, the digital pie in the entire revenue stream for media and entertainment.
No, it's interesting, Vijay. I'll come back to you, after I spoke to the other panelists in terms of how are you preparing yourself for this new normal, which is of quite a spike in its nature, right? What operating procedures you are changing, how you're embracing technology, not only from the channel perspective which you're providing with the customer, but as an organization. So I'll come to you on that one. Hitesh, if I can come to you, right? So reality sector is also an end user market. Okay. Now with the lockdown, everything became distributed workforce environment, right? I live in Bangalore. I know that many of you as well, right?
No, I am from Noida.
Okay. So what we have seen is that many organizations have enforced, their staff to work from different from their home, for which they have to now move to hometown, because if it's connected digitally, you don't need to basically be in the metros and you can save the rent. Now that has led to another trend which I'm seeing, that the demand of the housing markets in tier 2 and tier 3 cities are going off the roof.
Correct.
Right? Because there's a better value-based pricing, larger spaces, low cost construction, better infra, skilled workers, and so on and so forth. Now, how, as Magicbricks, because again a digital channel, right? How do you respond to such shift in trend, right?
Okay.
And how do you prepare yourself from not only solving the immediate problem, but identifying the opportunities as well?
Okay, so let's see the COVID impact. That's realty sector is also got a lot of hit with the COVID one. So there are 4 pockets which I can say. One is like what you rightly said, that home buyers are likely to postpone their property purchase decision as they wait for the clarity of job security. So we have also seen that the job index has fallen drastically. So one, there's a postponement of whether I should buy property now, and there has been a search result on Magicbricks that people who are earlier looking for a 2 BHK kind of flat, they are now looking for 2.5, so that half of a room they can convert into an office kind of a setup. So that's the one impact, like home buyers are postponing. Other is itself the construction is getting delayed because there's a delay in supply of construction material, shortage of funds at the builder end. Labor are going back to their hometowns or their villages. So this again stalled the construction activity completely in the last 6 months. So now there's being a reviving when the unlock started 1, 2, 3. So there would be a bit the kind of coming back. Other thing is across world, companies have announced a work from home scenario. So consequently, there's a impact on the commercial office space. So a lot of demand is getting kind of dropped. Even most of the companies, even as a Magicbricks, Times Group, we have also done a rationalization in office spaces. Earlier, we We have a good offices in all cities. Now we have also shrunk that considering work from home environment. So there's an impact on commercial per se. Other is what you rightly said, that it's corona resulted in closure of mall, retail outlets, entertainment hubs, all that. Again, this put a pressure on the real estate. As a Magicbricks, what we have done, we already had a product which on our platform, which is a kind of virtual experience. So there's a significant demand from builder shifted from the normal listing or a visibility package to a kind of a virtual tour. So that's kind of getting hit. But surprisingly, we have done one survey across different cities, and that service is in the last 4 months, we have seen the price of the property. In the last 6 months, the price of a property has increased 0.5%. So even though there are a dip in different kind of segments, but the price has increased marginally. There's a dip in demand, there's a dip in supply. But yes, demand at overall level a kind of shrunk by 26% and supply has shrunk by 42%, but still the prices, they are able to maintain the prices. So different cities have, few of the cities like the major impact comes in Pune market, Mumbai, the 50%, Ahmedabad, the demand has 50% kind of a shrunk, but supply also restrained, but in a way we are able to maintain a kind of price on that one. So to answer your question, yes, we have launched certain products which are earlier we have launched, it seems to be future ready, but there's not acceptance at the market. But now those products are in high demand, like a virtual tool, virtual experiences, all that. So we launched that product 2 years back, but there was no demand of that. Just like a Zoom, Google Meet, everything is available, but people are not using that. Yeah. But since the shift has happened, there is certainly a kind of demand coming.
Yeah, no, I think, and I think I could envision that, it's more virtual tours. So again, we're talking about the channels, which is quite important because it's end user, and Vijay also spoke about that. I think there's similarity between Magicbricks and Eros from that perspective, that you have channels which is quite correct to engage with your customer. But again, I think I'll just bundle up the question for both of you. So, okay, if that is the case, you're seeing this spike. How are you making your organization ready to respond? How are you making your processes nimble? How are you automating these processes? Because there's a continuous shift in the way market is
correct,
right?
So surprisingly, we have done so we have done 2 big process automation in the last 6 months. One, we have moved our SAP completely from the previous to a HANA module. That's again, it's a kind of a process improvement which brings a lot of control. Second, we have migrated from, so we are a 13-year-old company. We have migrated from our homegrown CRM system to Salesforce in the last 6 months. Considering we found that this is the time where we should invest our time and energy on the things which will help in the future. So definitely, again, it's a build versus buy decision whether I should invest on my CRM.
This is very interesting because as CFOs, I would like to, and I'll come back to, because that's a very important question. As a CFO, which project you will sign on the dotted line, right? So there are a lot of these departments within the organizations want to have their own view in terms of the digital transformation. What does it take to get the CFO's attention and get that pen to sign on the dotted line? Okay, approve this budget. We can go ahead and do it.
So it's a question of choices. In the pandemic, so there are different bucket of choices we need to make, whether we should go with the revenue or the safety, because all the companies are getting in this choice. Again, it's a choice of whether we should get leaner on the manpower front, or we should let it be a loyal, because there are a lot of people with the organization. Again, there's a cost rationalization, whether I should reduce a management manpower cost or the team manpower cost. So there are different choices we need to make. And one of the choice is whether I should invest in this time on the technology to make our system ready for the future. Is again it's a difficult choice we have to make. But yes, we have done cost rationalization on various other elements like office rental, even though we also streamlined or rationalized our manpower costs. But this is the one cost item we said that, yes, we have to invest on this, even though we are rationalizing on other things. But yes, this is the ROI would be much better on that. That's a choice we have done, and we have invested on
future-proofing yourself, right?
Yeah,
so,
correct.
Deepal, let me come to you, right? From a logistics company perspective, what I'm seeing, there's a trend here, right? Vijay, Eros, there's a trend where the traditional industry market has been impacted, but the streaming has gone up. With Magicbricks, there's an impact on the commercial property and metro, but then the tier 2, tier 3 has gone up. And the same thing, if I have to draw a parallel, Deepal, is about the logistic industry, where we have seen that while the B2B logistic market has been impacted, there has been explosion in B2C market, right? And thankfully, because when we were a start, right, they were the frontliners, and thank you for that, that we were able to get what we wanted from the essential perspective, right? But at the same time, given that the focus is on the cash conversion, liquidity, how do you see, or how you're seeing the technology being used to minimize the business risk and drive the sustainable growth? Because I think the model has shifted now, right? Because you've gotten used to certain way of living even now because of pandemic, and you want to continue, right? So how are you seeing that, and how are you embracing technology to that?
Yeah, hi. Sumeet, you very rightly said that this COVID has, changed a lot of things for a lot of companies. Logistics more before e-com came in was more of a brick and mortar company. It's actually everything, you have to move the cargo. So I was speaking to one of the management institutes, to some of the students, and the students came and asked me that with all these online platforms happening, what will happen to the logistics company? So I asked him one simple question that, all right, I mean, you did your order online, but did your shoes come through the laptop?
Digital.
No, it did not, right? Still, I think there's a very long way for 3D printing to come of age, where we'll be able to just download a design and just print the shoes and wear them. But meanwhile, logistics companies still continue to perform as brick and mortar. But yes, the entire back office, except for the delivery, the entire back office, which was the whole, the customer connect to the service delivery, in terms of, except for the delivery, of the cargo, the entire process can now be automated and put it online. So there's been a lot of work done, a lot of if you look at even the shipping companies, once upon a time, an absolute shipping company which was absolutely brick and mortar is actually now moving into digital space. Earlier there were bill of lading. A bill of lading is a very important document. It's an original document. They have evolved into an EBL now. So if you see, everything is changing. Yeah. The only thing, unfortunately, for large logistics companies like us, there's a lot of connect through the various governments, ports, and many other bodies across, So the syncing up of all of them on an online platform sometimes becomes a little bit of a challenge. But I think that will take a little longer time. But I think it's moving in that direction. And earlier, before COVID, like e-com was, we are also into 3PL services. E-com was doing pretty okay. It was not, there was more of chemical, auto, all of these doing much better. E-com has just boomed. I mean, if you've seen the amount of, I think, almost 22,000 crores of spend in such a situation on Flipkart and Amazon through the last few days, itself shows that the entire delivery system and the entire thing is now, people are happy to buy online. As far as the risk is concerned, in terms of collection of money and all, I think the payment mechanisms have also become online. So a lot of people are now kind of, in fact, over the last 7 to 10 years, the entire transacting for a CFO is actually a digital transaction in terms of payment. I hardly believe any of the larger companies would be actually issuing physical checks anymore. Yeah. So there's a huge transformation, and this is going to just push it to the next level completely, I think. So I mean, you just see Paytm is also, I mean, from the Paytm now you can make investments. You know, the whole game has changed as far as finance is concerned.
UPI ID now, so it's all
Yeah.
digital, right? So now it's interesting to see people, and you know, I'll come back to you. I just would like to understand a bit more with this Amazon and Flipkart sale taking place. How do you prepare yourself for such spike, and how do you ensure that your processes at the back are robust enough to respond? How do you have that fungible capacity? Do you use digital workers, automation processes? What do you do to basically respond to that? So I'll come back to you for, with that particular point. But Omar, if I have to ask you a question, and Gaurav, Omar, I'm putting BFSI sector together. Just tell me I'm cliched, it's fine. I just thought it's easy to put that way. But if I take the extension from what Deepal spoke about, right? So he spoke about there are two parts to it. One is in terms of providing the material, the goods, and second is in terms of doing the transactions. Right now, transactions are taking place digital, which then falls into the banking domain. Now, I've been in the banking industry myself for many years, and I've seen an intense focus and interest on automation, adapting automation technologies from your company, from Sindh Microfinance. I was doing some research, and I've seen that you have grown tremendously in the last 10 years, and 330 branches are there, digital branches, which I need to understand what that means, to be honest. But how do you respond in when you have such a massive growth, such a trajectory, and then suddenly you are faced with pandemic, right? How do you, rearrange yourself and keep moving, keeping technology in mind?
Yeah, it's a very challenging time because, especially for banks, on the pandemic side, there are two sides to the bank. One is the deposit activity, transaction activity. The other is the lending activity. Now, on the lending side, everything went like, I don't know if you see your EKG is just moving around like crazy.
Yeah.
You had huge issues in terms of giving deferments to customers, giving moratorium, and that created in part liquidity issue. Now you don't have the cash coming in from who you have lent to, according to the timelines that they're supposed to pay. So on the other hand, you have to understand the customer's need. And then on the other side, there's a whole transaction platform that is developing. Like Deepal said, most of the corporations are now transacting electronically. So are many consumers also transacting electronically. And what that has done is that banks have a fear of missing out, what you say, FOMO. So now they have to really develop their digital infrastructure. But it's a matter of survival, because if you don't do that, you miss out on the customer experience later on. And what will happen right now in developing countries, the smartphone penetration rate is not so high. I mean, it could be higher, but it's really not high. And as you go to the rural areas and the semi-urban areas, you don't really see so much of smartphones. Either the internet is bad, so it doesn't make it feasible, or it's very costly for them, at least. But this area also will gradually change. As you see the internet evolving, more 4G services available in many, many other different areas and everything. And this is just going to expand. When that happens, the customer will have a choice. You see, now the customer determines the marketplace. And that is, the shift is really happening. And as a bank, if you're big, small, doesn't matter. If you are not there for the customer on that digital platform, when that shift occurs, I don't know when it will occur, but it's about, then you will lose out on the customer base. So this is one of the things, COVID has accelerated the adoption of digital channels. And so what has happened is that on the customer side, there's a good adoption, especially the consumer side. But on the company infrastructure also, previously I met a lot of CEOs and they were like, no, I want to see a printout. No, I want to see it inside a check. I want to see how it goes and everything. There are a lot of people who like the physical touch, and they like their their stuff delivered to them physically. We're talking about a band of people who are in their 50s and 60s and 70s, right? So now they're not so digitally savvy, and they're still at the helm of the affairs, and they want all this to be. COVID has put them in a box.
Yeah.
Now they're able to. Now they have to communicate with their staff and say, "Oh, how does Zoom work? Okay, okay, Slack. Okay. Oh, now this is good. I'm enjoying that." So, I mean, even if you have Microsoft Teams or whatever. So they're now becoming more digitally savvy, and this is going to change. Now they're asking different transformational codes. Oh, if you can do that, why don't you do this? Ah, okay. And now they're looking at databases. So, for example, when you give them data analytics, they're like, ah, okay. And they're very happy to see real-time data because they can access it themselves now. And when they can do it themselves, they ask more productive questions. If you do this, what's going to happen? Yeah. Oh, are we missing out on this area and this? So, I mean, on an organizational internal level, the cultures of most organizations is changing, and that's a new reality. For a banking perspective, our marketplace is actually changing. It has shifted in so many other places. Now banks are not putting up physical branches. Brick and mortar structures are going down. The cost is just too high. Although, of course, we live in a digital, we live in an economy where 80% transaction is still done in cash, which is not so good. But you still have to have the infrastructure, but it's going to be phased out. It's gradually decreasing. So I think these are the challenges that we face at the moment.
No, I think mindset change is a big one. I think I can see with my parents as well. They don't have a choice, but now they're using the platform to order things online. They ask me a lot of questions, but I think it's just part of the process which we need to go through. Gaurav, insurance, I work in a French organization, Gaurav, as well, so I understand a bit of French culture. Right? Just to bring up a story quickly, I used to work for an Australian organization. The automation journey over there, it's all about fail fast, fail fast. And then when I took that particular concept of French organization, okay, let's transform the organization, fail fast, I failed miserably. Because the French organization is saying, why will we invest on something which you are guaranteed will fail? So we have to change from fail fast to train fast or try fast. So the reason I say this story, Gaurav, is that you have there's a mindset change which is required in an organization. And insurance, we know in the insurance sector, the automation has been a game changer in many ways, right? We are doing fraud detection is happening. The underwriting point is happening through automation. We're seeing that to a particular point, some of the cases are being approved, right? So you don't have to have the manual intervention over there. Whatever claims you are putting through up to a certain particular threshold are automatically using AI sense and cognitive automation they're getting through, right? So knowing that insurance companies have been embracing this, what has been the still major challenges which you have faced? Because hospitals and insurance companies and banks have been severely impacted, right? What changes you're seeing as a result of COVID-19, and is it driving for more digital, more automation? What are the trends you're seeing from them?
Yeah, thanks, Sumeet. And as you rightly given a good example of a French company, we all know that how that French culture works. But yeah, I just take you to the bit history of the insurance. I think insurance as a business has started as a mutuals, where many people have sat together and said that let us share the risk. And it's more of a relationship business. And that's quite similar to banking also, I think. People sat together and they said that we will share each other risk and share some money. And then if somebody faces the loss, then we will give the claim to. So the entire business culture has been started with a concept of relationship, meeting people, each other and all. But for the God's sake, I think good thing is happened to the insurance and banking both. I think digitization has started long back already in both the sectors. I think most of the insurance has been sold through a digitization mode, and in banking also most of the business transaction has been happening through the digital mode. But that more on a B2C side. I think the thing which we have to look into is B2B, as Omar has also mentioned, and second is culture. I think these two things I want to touch upon here, because we are a reinsurance branch, so we are more in a B2B rather than a B2C. B2C is something where insurance and bank is already seeing digitization. They are working on it, and I think most of the policies and things have get renewed online. People are making payments online. So things are smoothizing there. But the challenge was there in B2B, where, CFOs like us in big companies wanted people to visit them before they renew the insurance policies. So there are a lot of things which happen on a personal relationship, where people have to travel, people have to talk to them. And then those things happen as in renewals. Big renewals happen in the corporates in terms of PNC and in terms of, corporate life insurances, health insurances. So in those, people wanted, more in a personal relationships. But I think things again changed there thanks to the COVID. I think everybody knows about it. So before I start talking about it, I want to give a reference of an American politician, saying, he said that you never let a serious crisis go to waste. And what I mean by that, it's an opportunity to do things you think you could not do before. So I think this fits completely well in all kind of industries where we are. We've heard Vijay, we heard Hitesh. I think nobody thinks that OTT or whatever those platforms or those digital places are really going to play a role. But now when the COVID is there, everybody is after that. The share prices have gone lifetime of, as we just mentioned. So I think this is something is become an opportunity for few industries. Obviously, it's not good for everybody. People are losing their jobs. There are challenges, there are salary cuts. A lot of things happen. But I think it's also a big learning for all the industries, including the insurance industry, where I think B2B transactions have been changed, and more importantly, the culture. As you said, you worked in a French company, as Omar has mentioned. In banking also, people wanted most of the things to be printed out and given on their table to review. I think all of us have learned that if we do not have that option available, that it can be printed out and given to you, it's Zoom, it's Team, it's all the digital media where you can talk to each other and take decisions. I think decision making has also improved a lot in this situation, and particularly in insurance, as I said, where we have to reach out to the corporates for the insurance renewals. I think we have been going more digital in that platform, and in this situation has helped us a lot in that, I think. And I think I've noted down few things with all my colleagues have spoken here. I think a few of the things which I've noted down is it's not the big fish who eats the small fish, but the fastest fish who eats the slowest. I think we all have to become the fastest rather than big. Because if we are fast, we can really transform and we become more digital rather than becoming a big and not able to transform ourselves in a quick scenario.
Yeah, you're right. I think it's about time to be nimble, right? And to respond, be able to respond to the situation, because we just don't know how it will pan out. Whatever we are anticipating may not turn out to be that way, but in a different way. So, previous session. So first of all, we are getting questions now. So I'll pick up some questions from the audience as well. So thank you all. I think please post more questions. So it will help me to answer, take your points to the CFOs. Now we spoke about CFOs as a advisor, right? Now, if you wear a CFO hat, okay, in your backyard, in your team, how are you seeing the automation playing role in the finance space? Right, we know that there has been a lot of pressure in improving productivity, in reducing operational cost, right? How have you? So while there has been opportunity, as we spoke with, as we discussed that with OTT and Magicbricks in insurance and in logistics, there has been quite a spike in some area. How have you been able to keep the bottom line, right? Your cost structure the same and not increasing costs. Would get to know some tips, what smart technologies you have used. Have you used automation technologies like RPA, AI? So it's for anyone to take, so no one in specific. So we can double dip. I'm happy to talk on this point for the rest of the time as well. But yeah, Gaurav, Vijay, Deepal, Omar.
I can take that.
Yeah.
So in Magicbricks, so I joined Magicbricks in 2009. So I have seen kind of the growth in terms of system processes implementation. To say the last decade full of lot of improvements we have done, but we in the last 2 years, it's a time when we really thought that let's move ahead in the automation and keep my team ready for a kind of, so we call it finance 1.0, 2.0, 3.0. So as on date, we are at finance 3.0. And in each these version of a newer, better finance, we have implemented something for the team and something for the organization as well. Just to give you example, we are working on RPA in the current setup scenario, where there's a mandate from me to team for every 3%, 1 hour robot would be working, the bot would be working. It's not like I'm reducing the headcount, but yes, this bot would be available 24/7. Even if the business is increasing, if we are getting 10 times more orders, this bot is working. This bot is not dependent on any location, any person, any geography. It's just sitting on one server and keep on doing that. So a lot of monotone or repetitive tasks, which my team used to do, like order processing, passing entries in SAP systems, there are order activation, all that. So we are working to move to the bot process. So that's a bring an efficiency. When we say how I evaluate a kind of the benefit it's coming. So there are two aspects. One, which we can clearly see that this efficiency is coming, which we can measure that. Other, there is which we cannot measure. So we call it as a soft ROI and the hard ROI.
Yeah.
So soft ROI means a kind of higher efficiency and productivity, improved brand reputation, better team collaboration, lesser fraud, fewer bottleneck in the processes. So all these metrics we track whenever we are implementing a system. And the hard ROI comes in which we can quantify that. For example, if my team member is doing a particular order processing in 4 hours, or maybe say 3 hours, whether he's doing the same in 10 minutes or 20 minutes versus some automation. So it's time saved per task we evaluate. So just to get that overall process cost saving. So it's a clear. So when you implement something, there is a one-time cost deployment and the license cost, but yes, the efficiency which comes in, or the benefit over a period of say 2 years, 3 years, it's the break even, and then you start getting more benefit out of that. So this is one example I want to share on.
No, thank you, Hitesh. And I think, yeah, Omar, you have got something to contribute?
One of the things I would like to say is that now in a couple of companies that I've worked with, when you talk about automation, you have to understand there are some legacy systems already running in place. I'm not talking about the top companies which can invest heavily in very expensive softwares and complete do an ERP overhaul. Most companies are not there yet. So we're talking about them. So when you talk about them, they're legacy systems and they have certain databases, licenses and everything and all that. Interestingly, the CFO is sitting on the budget. All right, and he's also responsible for taking the automation and the business transformation, digitalization forward. In order to do that, you need to be a little, from your IT team, the CIO and everything, you need to ask the really stupid questions. And by stupid, I mean it's good, it's smart to be stupid in those areas. So for example, for a bank, if you have a core banking application and it is hooked to anti-money laundering software. Now you're putting on another customer risk profiling software. The problem is that you have to inform from the customer risk profiling software to the core banking. And it may seem very easy and the IT people will say, oh yeah, it can be done, we do this and this, that. But then you find out that there are some areas where unique codes are used, some areas where metadata is used, and it's not possible. So the interesting thing is you have to go through the flow chart. It's a little bit of an exercise, and ask the stupid question, okay, how will this machine talk to the other? How will this database be, how will you get this and put it over there? How will I get my end result? That's what the CFO should be concerned about. How do I get my end picture? Yeah. Software vendors will sell you. Your IT team is just looking at the technical side, but you're looking at the big picture and you want it to happen. And in order to happen, you have to have a better eye. So I think it is evolving towards these nitty-gritties as well.
Yeah, and how practical it is from the finance perspective to have no-touch finance, right? Are you, as CFOs, are you seeing not only in your industry but in your company, but with your peers? What we're seeing with our customer is that closing of books, if you take that as a traditional benchmark, right, organizations are able to close the book on a real time. So there's no quarterly, monthly, sort of a report. It's happening real time report coming through to CFOs. because of which, if the data is available more frequently, consistently, accurately, they're able to make more decisions. Now, is that something which you and your organizations are gearing up for as well? And if you've done that, how are you going about it? Because it will be a good takeaway for our audience. And then I've got a few questions which I'll pick it up from you.
Yeah, absolutely. I mean, I can just give a brief example. You really don't need too many staff to do your financials, even your bookkeeping, budget, even variance analysis, all these traditional finance functions. Yes, the small companies are still doing those, but you don't need staff for that. You have automations to do it. There's so many softwares out there to help you do it. And it's the integration. If you can integrate the supplier, the purchaser to your systems and everything, your bank reconciliation, when it comes out, the bank statement, you can put it back into your system, your reconciliation happens. I mean, I can't go on. But these things are now out. As a CFO, I cannot be concerned about that.
By default, it's taken for granted, should be taken care of, right?
Yeah, exactly. So as a CFO, I'm not going to be concerned about that. I'm concerned about my real decisions, my investment decisions, where my money is, how my liquidity is, how am I going to put my liquidity where it belongs, which projects I'm going to finance, how they. Now, as a CFO, as a chartered accountant, and so on and so forth, I'm not trained to be a project manager, right? That's not something we got training for, but we have to learn. We have to through the project management cycle also. I'm not also trained to be an IT manager, but I have to understand data analytics because that's where my revenue drivers are coming from. I have to look at the queries. I have to ask for more queries. You run this query, I want to see this and this and this. Or if you have like a big query, you do it yourself. I don't know. I mean, the thing is that you have to work towards that area where you can get the analytics back and use it to say, my revenue drivers over there for this product line is bad. Maybe we're not positioned accurately. Maybe the segment that we are targeting is not okay. Or maybe you can tell the marketing, look, you're spending so much on those messages and the web placement, but it's not really working because the figures are not coming back. Yeah. You also set the KPIs and the key risk indicators as a CFO. So you need to be focused on that. So these traditional functions, financial budgets and everything, these are, I
think that also leads to a point, and maybe the last question I'll keep it at how as CFOs you are basically setting a budget aside to train your staff so they are able to, not only digitally native, but they're able to continuously upskill themselves. And I'll come to that. But before that, I just got a couple of questions here from our audience, and I would like to ask that. So this is for you, Deepal. It is from Akanksha Singh, suggesting that, okay, how you as a leader welcome an AI in e-commerce?
AI? Sorry, what was that?
Yeah. So how as you leader welcome AI, artificial intelligence in e-commerce?
Oh yeah, I think e-commerce or commerce is, I think, more all about artificial intelligence. I think I don't know whether you've been noticing. There's a lot of algorithm-based artificial intelligence being used to study forecasting patterns, demand patterns. The amount of data which is being used for e-commerce is amazing. They actually map your requirements. They look at what kind of buying you do, and they actually give you suggestions, based on customized expectations. So, traditionally there were two factions. One was you have a mass production, which is like a McDonald's. You can't go there and ask for a customized burger. You just get a standard burger. Or you go to a fine dining and you get, a very nice kind of tailored kind of food for you. Same thing is for your clothes. Either you have a standard available product, or you go and get it customized, which is more expensive generally.
Yeah.
The AI and the algorithm allows you mass customization. Please note the difference. It's mass customization.
Yeah.
That is amazing at a very little cost. The amount of intelligent forecasting that AI can do for e-com, it really helps them manage their supply chain, helps them manage their inventories. based on demand forecasting. Otherwise, they will be outstripped out of their products if they are not able to forecast their demand well. So yes, I think to cut it very short because of the limitation of time, I think AI is an extremely important aspect for e-com. Not only for e-com, for everything else. And so just to add, I missed out one point on the credit risk front, which you mentioned earlier. Going forward, when the blockchain actually unveils itself fully, the credit risk is going to evaporate because you're going to be having access to all the ledgers online. There are shared ledgers, the whole concept.
Which cannot be corrupted.
Yeah. So it's a changing world, and we have to wait and watch for how this moves forward. Yeah. That's all from my side. For paucity of time, I'm not taking away too much of time.
No, thank you. I think you said about amazing. I thought it was scary is the word, because when you speak something in front of Alexa, when I open my app, that app is there. So it's like it's all connected. So in the interest of time, I'll just do one quick round and ask you something which I often ask. It's a bit of a curveball. I'm going to bat at the back, so I have to use that particular analogy. That as CFOs, what will you not sign on? Which sort of a digital transformation automation project you will not give approval for? Vijay, let me start with you.
Yeah. So obviously, when a particular proposal comes up, automating something, I have a simple mantra that every department in the organization should identify what is an operational work that they do, and whether that operational
Okay, you want to stop and start your audio because it's breaking.
Now it's better?
Bit better. How about this? Let me come back to you, right? But don't change your answer, okay? Come back to you. Let me come to Gaurav. Now you're on mute here. Thank you.
Yeah. So when you say that, when we take a decision in which technology I think we should invest, I normally, have a very bookish answer on that when we say that there are 5 specific factors. I think the first one is the technological feasibility, that whether, I've seen in many organizations when people keep investing, understanding whether what will be the end result of that change or digitization which we are going to do, and whether it really going to help in, productivity improvement, or it's just some cost which we want to incur. I think the second factor which I normally consider is the cost of developing and deploying solution. Obviously, being in CFOs, we have to consider it as a first place. But yeah, before that, I will do technical feasibility, and then I'll talk about the cost. I think 3 more points about kind of a labor market dynamics. What are the dynamics there? What are the economic benefits we are going to drive? And because we are in the BFI sector, I think most important thing is a regulatory and social acceptance. How it is going to play a role in regulatory and social acceptance. As we've seen that Paytm, RuPay, and all those digital platforms came in, but now finally they have been completely regulatorily accepted, and people are making transactions over it. So I think whatever digitization we do today or we think about doing today, I think we have to think about 10 years later how it is going to be accepted in a social economic section and the regulatory part.
Thanks for that. Vijay, you want to give it a shot? Hopefully audio is working now.
No? Yeah. Better?
It's not. Let me come back to you again. Deepal, if you can respond.
Yeah, sorry. What was the question?
For each, because I'm getting prompts here to we're running out of time. So, sir, over to you. 1 minute quick snapshot of what, as a CFO, you will not sign on. What do you see in a digital transformation process?
See, I think it's for a CFO, I think everything is about ROCE. So return on capital employed is the main thing for all businesses, for that matter. The only thing for technology is I would look at a little bit long-term ROI or an ROC, but you also cannot, like traditional projects, have a 10-year or a 15-year kind of an time frame. Technologies get obsolete very fast. So I would look at a 5-year, a shorter time span for it to generate back cash flows, either in terms of revenue increase or cost reduction. compare it with a fairly, a good discounting rate and see if actually, with a little contingency, see if actually this is going to make commercial sense for me, yes or no. That would be my method, and that's what I think would happen. I would not sign off a project which is digitization just for the sake of it. If it's not really adding value, it's not transformative. See, the digitalization has to be transformative. It just cannot be a single-handed small process with just a tweaks, something for the sake of it. So the purpose, the objective, and of course the value, so that's the balancing act that I would do to sign off.
Thank you, Deepal. Omar, if you have to throw your thoughts on that.
Yeah, so very briefly, there are two types of areas where I'm going to look. One is, of course, I'm a regulated entity. So from a regulatory angle, if I have to have a Forex management system or a customer risk profiling system or an AML system or XYZ, whatever, I need to have it. End of story. And I need to have it by this date. So that's a different thing. I take it all out together. Now, from a business trajectory point of view, to have a digital presence, if I have this goal, I'll have a digital presence by 2020 and I'll have these channels offered to the customers. Now I'll work back what I need for that. Anything else that I don't need, I'm not going to bother looking into or wasting time into. The options that will work for me is from a deep study of what can go right with my systems that are already in place, and how will this incrementally help me over time to get to the final destination that I want to. I'm not going to spend money which is very costly now, but very cheap later on, because COVID has just completely messed up the liquidity situation and the CapEx situation at the moment.
Yeah, I was about to say.
I am going to invest in something which is relatively value additive right now, but hugely value additive later on. But it still should have an immediate value addition. But have a value addition now, sorry. Later.
I think that's a significant pivot which we have seen, right? It has to happen now, and the definition of long term, as Deepal said, has also shrunk. Hitesh, if I can come to you.
Quickly. So I will take this as a reverse one. I will sign particular automation if this help in better integration and compliance. It will bring a security. So that's the most important kind of a digital automation versus a legacy system. If the automation brings security, definitely it's a yes for me. If this automation helps me in grabbing a lost business opportunity, just like I give an example of Salesforce. Yes, we are losing some kind of a customer particular segment. If I'm able to get that, yes, it's a yes for me. It brings if this automation brings organization agility and efficiency, maybe a benchmark of say 50%, then this is yes for me. And the lastly is kind of a maintenance and support. If from the cost point of view, if it's cost effective, then definitely it's a yes. Anything not getting into all these 5 parameters, I would definitely not invest. So this is how I look at automation.
Thank you, Hitesh. Vijay, saving best for the last. You cannot repeat any of the points which have been spoken. You repeat the new one.
First, you have to tell me whether the sound is good.
Loud and clear.
So I just applied the basic concept of switching off, switching on. That's what the CFOs earlier, used to do. Yes. So as I mentioned, every department has to, analyze what are the operational piece that they're gonna, currently doing, which can get automated, and whether that automation itself is gonna lead to the benefits that every department and the organization is looking at in terms of monetary cost saving, in terms of value addition with respect to business, and a decision making can be done, which definitely have a good sign in the terms of top line addition or a bottom line reduction. If it is capturing or getting it benefited with these kind of wants of any organization to automate, I believe a sign off should be done.
Thank you, Vijay. Thanks a lot. Finally, I'm glad it could work. So if I have to sum it up, I just wrote the notes. So while I was typing, I was not being rude. I was just capturing your points. So it is tech feasibility, social acceptance, ROCE, long term has been redefined to 5 years or maybe less than that. It has to be from regulatory perspective. Some projects are mandatory. You don't look at, you just go and do it. But otherwise, you need to have a clear vision, and you have to go with that towards that particular vision with better integration and compliance, grabbing the lost business opportunity, agility, efficiency, operational automation benefit from cost settings and value to the business. So too many takeaways for everyone who have dialed in. And I hope I covered the gist of it. But on that note, really enjoyed having interaction with you all. Thank you. It was amazing. Learned a lot in the process, and I hope the same. We were able to provide some good takeaways over audience as well who tuned in. So thank you all for that.
Absolutely. Thank you so much. Thank you to all our
Thank you.
incredible panelists for joining us. Omar, Hitesh, Sumeet, absolutely for moderating it so wonderfully. Deepal, Gaurav and Vijay, thank you all for your insightful comments which came in. And definitely there were a lot of questions, Sumeet, towards the end. They just poured in. I have like more than 10 questions right now in my array, but unfortunately, I'm so sorry because we're already overshooting a little on the time.
Yeah.
We cannot be taking that up. But that just shows that how the delegates are so curious to understand from all our experts. So thank you once again for joining us today.
Thank you.
Thank you.
Thank you.
Thank you.